Hey guys, it's Carter, and today I just wanted to provide a really quick update on the S&P 500. But before we get into the update, if you don't recall what I had to say in my last couple of videos on the S&P 500, well, let me catch you back up to speed, no problem. Watch these clips, and then let's jump right into the update.
So I believe this is probably an A-B setup with a C wave to come that'll take us towards lower levels, possibly 640 to 610 to the downside.
So we do still anticipate a C wave decline to lower levels on this channel between possibly 6,500 and 6,100 to the downside. Now, for this to be a corrective move to the downside, which I am anticipating, by the way, I'm not anticipating for this to be a major top in the market, but I am anticipating a decline of possibly 8% from the highs. But I just want to remain crystal clear that even if we do see an 8 to 10% drop on the S&P 500 from the highs into the 6,400-ish area, that it is more likely just going to be a temporary pullback, temporary correction that's going to lead to new highs in Q2, Q3 2026. All right, so from watching those clips, you can see that we called for a C wave drop into the support region down here, and we did see that drop and the support region hold, and now have seen a rally back to all-time highs. Pretty amazing. So yeah, what do I think is next for the S&P 500? What do I think is about to come? And are there any warning signs in the charts? Join me in this video. It should be very interesting. All right, so here we are looking at the daily chart of the S&P 500. We're at 7,200 right now, a little over that. And we do see a bit of a shooting star candlestick formation that has occurred now here. And yeah, that makes sense. We have seen a pretty explosive move to the upside. And I do think we are about to see a little bit of a cool off, but not by much. I think we're probably going to be pulling back towards the $7,000, $6,900 support. And honestly, I don't think we're going to be pulling back much more than that before we continue the move to the upside. So I am, yes, bullish in the weeks and months to come here on the S&P 500. And I don't think we're going to be pulling back much more than the $6,900 support level, even if we get that low. 6,900 to 7,000 before we head further to the upside. Now, even if we do, however, head lower than those levels, that's okay. As long as we're holding 6,550, I'm going to continue to remain bullish on the S&P 500. If we do, however, drop 6,550, I am going to have to quickly flip bearish and believe that the market cycle top is probably in, and that the top of the market made will probably last for more than a year. Unfortunate, and I don't think that's likely, but that's the opinion that I'd have to have according to the charts if that were to occur, which I don't think it's going to right now. I think we're likelier to see a 3-4% drawdown to 7,000, maybe 6,900, not a drawdown below 6,550. So I don't think that's about to happen. However, a little bit of a cool off before we go higher is what I'm anticipating here. So yeah, due to some overheated signals and the shooting star right now, I do anticipate a bit of a pullback, a little bit of sideways consolidation towards the $7,000 level again on the S&P before we continue the upside grind. And provided we're above 6,550, I am going to continue to believe that the stock market looks bullish for the weeks and months to come. But the weekly chart, I want to show you something that I think could act as an early warning sign of a major market cycle top being in. All right, so now we're looking at the weekly chart. And you can see in purple here, these are my targets for the upside move in the weeks and months to come. I do anticipate the S&P 500 likely is going to poke its head above this resistance level here that has rejected us in the past, and we have seen major pullbacks off of. I do think we're probably going to be poking our heads above this level here, at least temporarily, and head towards the $7,700 to $7,900 level. Now, that's where I think major resistance could be had. Those are my target levels to the upside. Let's see how price acts up there if we get through this resistance level that's been rejecting price, and that currently sits around 7,400. So let's see if we can get above 7,400. Keep in mind that level is going to be an ascending resistance target, and then head to the $7,700 to $7,900 level on the S&P 500. Now, the important warning sign that could present itself in the weeks and months to come is a move above the 7,400 ascending resistance level into the Fibonacci resistance, and then a rejection that takes us back below the level of ascending resistance. So that would be considered a major bull trap in my eyes. And this bull trap occurring would be a major warning sign for me that this major market move towards the upside, this major bull market could be over. It would be something I would have to consider. So yeah, at the moment on the daily chart, in the days to come, maybe some consolidation to downside towards the $7,000 level once again, before we continue to grind higher in the weeks and months to come on the S&P 500 is what I anticipate occurring. I do believe that we are getting close to a major market cycle top and would like to see some warning signs present itself first and breaks of support to occur before we call a top. So provided we continue to hold 6,550, which I do anticipate us holding and doing so in the days and weeks to come, I am going to remain bullish for a move towards the upper 7,000s in quarter 2, quarter 3, 2026. All right, that's all I have in this video. I hope you took something valuable from it. Take care. Have a good one.